to Mad Money. Welcome to the United States Air Force Academy. I always say I'm not here to make friends, but I am making an exception tonight for the incredible cadets and airmen we have with us tonight right here. From the Canyon of Wall Street to 7,258 feet above sea level. I want to help you make some money. Are you ready?
They secure our skies with a commitment to the shared ideals that bind us as Americans. Now, Mad Money takes flight to help give them the tools to secure their financial future. A place where the sky was never the limit, where falcons fly. This is life at a different altitude. We are here to celebrate those who fly, fight, win. From the United States Air Force Academy, Mile High, Mad Money begins now. Let's fly.
This year, we're getting a head start on Veterans Day at a great institute of learning, the United States Air Force Academy in Colorado Springs, where we salute the brave men and women in the armed forces who protect our country. These people right here will go on to be natural leaders with a passion for keeping our nation safe. And passion's a terrific thing. I met people this morning who have a passion for jumping out of airplanes, an interesting opportunity that I politely declined. I've met people who are learning to fly our planes to wherever American power needs to be projected around the globe. And we thank them for all that they do. We thank them for their service. Now, look, passion comes in all shapes and sizes. And Cramerians know my passion is to teach money, how to preserve it, how to grow it. Now, it's too soon for many people here to start talking about investing. They've got a big job to do. In fact, this morning I asked a bunch of ladies and gentlemen if they spent any time thinking about stocks. It was right before they were about to toss themselves into a plane to parachute out. One candidate quickly reminded me that no, he wasn't thinking right then about money. He was thinking about jumping out of a plane. That fella's got his priorities straight. But I got my priorities too. I want to say that I'm here to defend and protect your savings. But that may be laying it on a little thick. Let's just say I'm your volunteer investing coach and leave it at that. After a sedate fade for the averages where the Dow inched up 6 points, S&P rose 0.26%, NASDAQ advanced 0.48%, I need to talk about something that's been nagging at me for days now. See, earlier this week, this terrific kid, it was a 10-year-old kid. His name was Luca. And he called me and he said, you know what, Mr. Cramer, I want to buy Dave & Buster's. Now, the chat's the chamber, every location and restaurant combined with a sports bar, combined with an arcade. I told him, look, I can't recommend it. When my daughter was Luca's age, my dad and I would take her to a Dave & Buster's on a pier in Philly, not far from where my dad lived. We would lose fortunes trying to pick up a 20-cent trinket with one of those crab claw things, you know, like... Hey, what kind of job is that? I don't know. I mean, it was, to me, a big waste of time. Now, look, I like Dave & Buster's, the concept. It has a legitimate reason for being. It's part of what we call the experiential economy. But a funny thing happened to the experiential economy thesis. It turns out that cruises, glamping, oh, by the way, that's glamour camping, and yes, Dave & Buster's, while they may offer great experiences, doesn't necessarily translate into earnings power, to say nothing of staying power with the consumer. All right, so the last time Dave & Buster's reported guidance missed numbers, the stock was poleaxed. We've seen the same thing with some of these cruise lines, particularly, unfortunately, Carnival, because it's a really well-run institution. And camping, I mean, don't even get me started. So if Dave & Buster's is off the table, what kind of stock would be right for a 10-year-old like Luca? I always say, don't overthink it. If you got a kid, you should buy that kid's shares in Walt Disney. Last night, Disney reported a sharply better than expected quarter and gave you a very bullish forecast for its upcoming streaming video service. That's called Disney+. And that's why the stock jumped more than 3% today. At one point, the stock was over back 140. When you're buying stock for a young kid, you should go with the stock of a company they know. Now, I personally can't think of a brand children know better than Disney. Now, you need that personal knowledge. Why? Okay, this is one of the most important parts of investing that I teach. Because stocks go down. Disney's something tangible. You can see it. You can figure out if something's really wrong or not. You can go to the theme parks. You can watch the movies. You can get it. Here's the real difficulty. It's entirely possible the story could go off the rails at some point. And the really great CEOs, like Disney's Bob Iger, they know this. That's why when you buy something for a long-term commitment, you need a company that's not going to become obsolete. And that's one reason I can't cotton up to this Dave & Buster's. It's not a fount of innovation. But Disney, with an incredibly ambitious Disney Plus plan and a stable of ridiculously popular franchises, just listen to what Iger had to say on the conference calls that I always tell you to listen to. And I quote, "I talk about the inevitability of change, our ability to both drive it and adapt to it. It's part of Disney's DNA, and it helps keep us relevant to each new generation, while also creating new opportunities for growth," end quote. If you want a long-term investment, you need a company with a leader and a culture that embraces change and triumphs over adversity. Oh, and let me add that Iger knows the future belongs to smart, young, tough people like those in this room, which is why Disney's hired 10,000 veterans since 2012. More on that later. All right, who else fits the bill? Listen, when you're young, you have a lot of opinions, and you have a lot of options. You can invest in companies with tremendous long-term prospects and then wait for them to pay off. Now, do you know what the most incredible thing I have seen in recent years when it comes to technology is? And technology is unbelievable. AI, artificial intelligence, machine learning. Voice is now king. Specifically, technology lets machines understand what we're saying. Talk about Alexa, Erica, whatever. Do you know what powers the best machine learning? It's Nvidia semiconductors. Not only can machines powered by Nvidia learn, they understand idiom. I think they're the future. So for anyone out there under 30, including the cadets here in this academy, you want some Nvidia. That's led by HBR's Man of the Year, Jensen Huang, one of the most brilliant CEOs in our country. Don't get me wrong. When you're just starting to build a portfolio, your first step should never be to buy individual stocks, even great ones like Disney and Nvidia. Instead, you should put some money in an index fund as a bedrock retirement investment. But you know what? I believe people can multitask. The bottom line, once you've got your index fund exposure, here's an idea. Buy some Disney. Buy some Disney because of the brand, because of the leadership. Buy some Nvidia because it's the best technology I have ever seen with my own eyes. Just like the people at the U.S. Air Force Academy represent our future protection, and our defense, your portfolio needs some protection and some defense too. And that's what those stocks are for. Let's take some questions. Yes, sir.
Hey, Jim. Ryan Kirk here from Birmingham, Alabama.
All right.
I had a question following your 5G technologies conversation from yesterday. We hear a lot from Amazon and SpaceX about broadband from space. Do you think there's any smaller players that are worth watching out for as we get the next billion people online?
Marvell Technology is 100% 5G. It's reconfigured itself in the last 2 years, gotten out of every low-end commodity business, gotten new. Its chairman is a guy named Rick Hill. He's just money. So I have to tell you that Marvell Tech, even after a 6% run, is the one to buy. I do like Skyworks. They're going to report in a couple of days. They're going to be a good job. Liam Griffin is excellent. But you see, he plays for the Patriots, and he just loves the Patriots. It drives me crazy. And a lot of times he's on the other side of me in fantasy football. It's Marvell Tech.
Hey, Jim. Brandon Van Meter here from Klamath Falls, Oregon. What's the best?
Klamath Falls?
Yes, sir.
My daughter lived there.
Oh, wow.
Yeah, she went to Oregon Institute of Technology, and then she went to SOU, Southern Oregon University.
What's the best profile mix for people within the age range of 19 to 25?
I want you to be as aggressive as possible. I would buy a biotech. I would buy a machine learning company. I would buy a company that is doing, let's say, something really fancy with the data center, because there's a lot of those that are doing a lot of good data center stuff. And then, look, you might want to do, I'm going to just mention one, a Beyond Meat. I know that sounds like, oh, Jim, it's totally overvalued, blah, blah, blah. Or one of these companies like Pinterest. That would be a nice mix. We mentioned Square earlier. I mentioned Square. Square's very good. What I don't want you to do is buy Kellogg or Campbell's Soup. Or, I don't want you to buy General Mills. I don't want you to buy Kraft Heinz. Got your whole life ahead of you. Yes.
How you doing, Jim? I'm Brendan Shern from Baltimore, Maryland. My question for you is, with the recent rebound of the biotech index, would you suggest stepping in now or waiting for a pullback? The lack of pipeline by the large pharmaceutical companies leads me to believe that it has legs and willing to work right now.
Look, I think, we just talked about what could be good. Biogen. If they have that Alzheimer's drug and it works, and the FDA seems it does, it's a triple. Not even a double. It could be a triple for one. If they don't, it's going to lose 100 points. Not so great either. I think Regeneron is a very, very good company. I like this. There's a couple of combinations of companies, but let me give you Bristol-Myers Celgene. That deal's going to close in a few weeks. That's probably the best of all these. Bristol-Myers Celgene will just be BMY. All right, your portfolio needs some future protection and defense. That's why you invest in stocks and companies that can triumph over adversity. On a very special Veterans Day edition of Mad Money, coming to you from the United States Air Force Academy. America's armed forces keep us safe and are guarantors of the freedom that we so often take for granted. Tonight, I'm highlighting companies that are doing their part to honor those who protect and serve. Then roughly 40% of the S&P reported this week outlining one major theme that I spotted in the retail space this earnings season. But first, it's a company that's hired 26,000 veterans and military spouses, and it can give your portfolio a jolt while it's at it. Don't miss my exclusive interview with the CEO of Starbucks as we salute our brave service men and women on this very special edition of Mad Money. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.